Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 23rd of January 2020, so welcome everyone. Welcome to this Thursday's morning session where we're going to have a quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, also just before we jump into the charts, quick mention of our JFD YouTube channel here, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we update on a daily basis. So yeah, you can find us on jfdbank.com and click on the research tab right there on the top. And yeah, it will take you to our page, which we update, like I said, on a daily basis. So I believe you can find something useful in there, guys. But for now, let's jump into the charts. Now, the first one I want to touch on here is the German DAX. Now, I talked about this one this week and last week, and basically what I kept saying that if we get a nice push above the 13,600 level, then yes, this in a way could create an opportunity for some higher levels, because the 13,600 level is the all-time high for the German DAX, or in this case I would probably should say now was the all-time high, because we did get a excuse me, we did get a nice push above the above that barrier, above the 13,600, and yep, the index managed to reach the area near the 13,640, from which, as you can see, it quickly reversed back to the downside, and it didn't even close a 4-hour candle above this 13,600 level. So the index drifted lower. It dropped back below the 13,600, and also continued to drift further south. Now, looking at this picture here, and looking at the cash index right now, we can see that the we do have the price slightly below the below where it closed yesterday, and the price currently sits around the 13,450 zone. So for now, guys, keep your eyes on some of these levels. So of course, we'll keep an eye on this 13,443 mark, which is the low of Tuesday, and if we see a drop below this 13,443, then well, we'll consider a deeper move to the downside towards this medium-term upside support line taken from the low of the 15th of August. So that's why, guys, for now, although we may see some declines, but we'll be very careful here, because as you can see, when we had a few declines here, it quickly kind of got picked up by the buyers and got pushed back to the upside. So that's why, and by the way, this 21 EMA acted as a very nice area of support. So that's why, guys, for now, we'll be very careful and cautious, but if we see a drop below the 13,443 zone, roughly around here, this in a way could also place the index below the 50 EMA here on the 4-hour chart, and all this could just increase the chances of a deeper move lower. But as I said before, still this move lower could be seen as part of a temporary correction, because like I said, overall we're still trading above this medium-term upside support support line taken from the lowest point of August. So keep your eyes on this one. With the upside, it's pretty straightforward. We'll wait for a push above the 13,640 zone before targeting higher levels, because this way the index would confirm a forthcoming higher high, and yep, it could open the path towards the higher levels. But for now, we'll be very careful and cautious here, guys. Oil. I talked about oil, well, this week and especially yesterday. What I was saying that given that we've managed to break below the 57.72 zone here, or in a way 70, this kind of increased the chances of a further drift lower. During my trader's tea time, we were still hanging around not far from this 57.70. So in a way, what I was saying, that if it remains below this level today, or should I say yesterday, then yes, we could see a deeper move to the downside, and this is exactly what happened. So we stayed below this. We even closed the 4-hour candle below this level, below the 57.70, and you can see the strong sell-off that we got after that. And this is what I was saying, that when for us now the main targets are going to be around the 55.30 zone, or even better, the 55 mark. So this is what we are targeting for now. Don't get me wrong, we may get a bit of a rebound here, maybe back up here a little bit, but that said, if the price continues to stay below this 57.70 zone, or even actually another thing that you could consider here, but again, that's a bit of a tentative thing, to be honest, and this is this little short-term downside resistance line. So this is what you could initially keep an eye on. So let's say, for example, if we get a nice rebound from this little territory here near the 55 mark, then yep, keep your eyes on this little tentative downside resistance line. But again, don't really focus on it too much, but just probably keep it on, because just in case, if this gets a hold up around here, this is where the sellers might re-enter the field and drive this one back to the downside. But if it breaks, still for the sellers could come in somewhere around this territory, basically up until the 57.70, and if it struggles to push above this barrier, back above this barrier, then well, we'll continue aiming for the downside. For now, like I said, we are aiming for the 55 mark. We want to see how it's going to perform around here. If it gets a hold up, and then yep, we will consider a possible rebound. If it decides to travel further down, then yep, that's not a problem as well. The next little target that we'll keep in mind is going to be this one right here near the 54.80 zone, just in case. If this territory basically holds, we could see a nice rebound. But if it struggles to push back above the 57.70 zone, then well, we'll aim for the downside again. Jumping into a few pairs now very quickly. AUDUSD, so I talked about this one as well. I talked about this one yesterday in my Traders Espresso. So basically what I was saying, guys, that keep your eyes on this medium-term upside support line taken from the low of the 2nd of October. Yep, that's correct. What I was also saying, that we will keep an eye on some of these key support and resistance levels. Now, the one thing that we were keeping an eye on, of course, was this little short-term downside resistance line, which got broken. And of course, in addition to that, we had a nice push above the 0.6846 level that I've mentioned as well. Now, of course, all this is kind of looking quite positive here for the pair, and in a way, how you could look at this one is, if it continues, let's say for example, to balance above the 0.6846 zone. Now this could still be a nice opportunity for the bulls to step in here and push this one higher, maybe towards the high of this week near the 0.6888 zone. But to be honest, this is the level that we're going to be keeping a close eye on, because if we get a push above the high of this week, then well, I mean, this would of course place the pair back into positive territory for the week. And let me just quickly show you what I'm talking about here. So this is a weekly chart, and you can see that currently it is or shall I say, it will be well below in the positive territory, because if it travels above the 0.6875 area, roughly around there, this is where it could start getting back into positive territory for the week. But again, for now, guys, like I said, be very careful. Yes, we did have a nice pop here. This medium-term upside line held nicely. We had a pop above the 0.6846. Again, like I said, keep your eyes on the high of this week near the 0.6888 zone, because if we get a push above that one, then well, this would also place the rate above the 200 EMA on the 4-hour chart, and well, potentially more buyers could see this as a positive thing. So, and then this is where we will start aiming for higher levels like the 0.6934 or even above that. In case this suddenly starts dropping, oh, by the way, I need to get rid of this downside line because this is no longer valid. In case this starts dropping below this medium-term upside line, for us to consider lower areas, a drop below the 0.6823 level would be required, because until then, even if we see a drop below this upside line, we'll still remain a little neutral in this little gap here. But if it drops below the 0.6823, which is the low of this week, now this is where it could turn out to be ugly for the buyers. So keep your eyes on that one. USD-CAD. Now, very quickly on this, I talked about USD-CAD yesterday in my trader's tea time. And basically I was telling you guys to keep a close eye on these two levels, and basically we had a nice pop through the upper side here, through this upper highlighted area near the 1.3105, and this is what I was saying, that if we get a push above this in a way could open the path towards higher levels. We will then aim for the 1.3174-75 zone. We almost managed to reach that area, but to be honest, we will take this as a success, as an achievement. And for now, what we're going to do here is we will continue monitoring this 1.3175 zone. We'll see how the rate performs around there, but what we could do now is, of course, we could now draw a nice short-term upside support line, a bit of a tentative one still, but nevertheless, we'll keep an eye on it. And this is how we could play the game here right now. So basically, even if it decides to correct lower, but let's say the rate remains above the 1.3105 zone, now all this could still be seen as a positive, and we could see another push to the upside. Now, that said, of course, if it drops below the 1.3105, kind of the last resort for the bulls to step in could be near this upside line. But to be honest, given that this line is a bit of a tentative one, so that's why if it starts dropping back below the 1.3105, now this is where it could become a little bit ugly for the sellers again. We could see even a drift back towards the 1.3025 zone. For now, guys, of course, everything is looking more positive than negative on USD CAD specifically, not because the dollar is on the stronger side, is mainly because the Canadian dollar has weakened. So that's why for now, guys, because the same story you saw on AUDUSD here, we had a push. So basically the US dollar is not really like that strong, I would say, because we saw the Australian dollar pushing higher, and this is, like I said, this is where here in this situation, as long as the Canadian dollar remains to be on the weaker side right now, then yes, we could see USD CAD pushing higher. In case this decides not to travel lower and not to retrace to the downside, if we get a push above the 1.3175, then yes, we will aim, we'll start targeting some higher levels, like for example this one right here, the inside swing low of the 9th of December, near the 1.3218, or even we could target the high of the 6th of December, which is around the 1.3270 zone. So keep your eyes on this one, guys. For now, like I said, we are looking for a potential maybe small correction, but again, for now we're more positive than negative on USD CAD. USDJPY, now this is a total different story here. So basically this is what I was saying, that the dollar is not on the stronger side. So you can see that USDJPY has retraced back down and dropped below this key area of support, roughly around the 109.70 zone. So this of course raises concerns now, and given that the equity markets have declined a little bit, especially today, and there is a risk that we may be now maybe going for a small correction or something like that in the equity markets. But again, that's still needs a lot of confirmation. So it seems that some investors are trying to be ahead of the game and jump into safe havens like the yen. So that's why we're seeing a bit of yen buying here, and USDJPY is falling below the 109.70 zone, this key area of support. So again, for now, what we're going to do here is we're going to continue targeting the downside. We'll aim for this 109.3940 zone, roughly around the low of the 10th of January. This could in a way get a hold up here because it's also not far from the 200 EMA on the 4-hour chart. So we could see something like this happening, basically. Where the rate could rebound, but if it struggles to push back above the 109.70, then yep, we could see again like this, something like that, basically a nice sell-off, a continuation move to the downside, where we will aim for the 108.8685 zone, roughly around here, roughly around the high of the 2nd of January, and then we'll take it from there. For now, we're more bearish than bullish on the USDJPY, but again, be very careful, guys. First, let's see how it's going to perform around the 109.39 zone or near this 200 EMA on the 4-hour chart. And the last pair for this session is going to be either your euro dollar. Now again, I've told you this yesterday in my traders espresso and tea time. Basically, guys, yesterday, what I was saying, that yesterday could be this calm day because all eyes are on the ECB today. So today, guys, we do have the ECB interest rate decision. Of course, no surprises there, but the whole focus will be on the press conference after the decision. So yep, guys, keep your eyes on that one. We may see a bit of volatility. So either have a very tight, or either have a stop loss which is comfortable for you, because we may get some one-way traffics here, and probably where if you like to trade like retracements or something like that, then well, be very careful with that, guys. So for now, looking at this picture, we can see that yesterday the pair did try to test this area, and to be honest, we might as well actually consider this as almost as a test of this medium-term upside support line taken from the low of the 1st of October. Now the big question here is, can it stay above this upside line? But if it cannot, even if it starts breaking it, if we see a drop below the 1.1066 mark here, then, well, I mean, this is where it could turn out to be ugly for the buyers, and we could see deeper extensions to the downside. So that's why, guys, for now, for today, be very careful. If we see a push above the 1.1118, yes, we will aim for the upside, because this would place the rate above all of its EMAs, and it could increase the chances of a further push towards the 1.1163-64 zone. But you know, to be honest, probably this level here, I will change this a little bit towards this little peak near the 1.1173 mark, and just in case, but basically leaving a nice space here for the upside if we get a push above the 1.1118 zone. Let me just quickly highlight that for our future reference. So that's why, guys, for now, in terms of just support and resistance levels, these are the ones that we're keeping an eye on. But again, don't forget that we do have the ECB today, and that's why, guys, be very careful, especially during the press conference. And yep, let's see how this is going to play out. For now, we're going to just observe this one. We're not going to do anything, and we'll keep an eye on these two highlighted areas and see if after breaking one of these highlighted areas, can it actually go for a further directional move in. So yeah, guys, for now, let's see how this is going to play out. Okay, guys, I really hope you found it useful. Thank you very much for sticking around and watching it till the end. If you want to join me at my traders tea time, as always, that's 14:15 GMT. We'll have a look at the news, how the news impacted the the market, and yep guys, we'll pick up on that, and we'll see how everything's gonna play out. And yep guys, I hope you found it useful. Please join me at my traders tea time at 14:15 GMT today. Thank you very much, and bye bye.